All right, hey gang, Nate Bear here, lead technical tactician from Monument Traders Alliance and Trade of the Day. And in today's video, I want to go over the indexes and I want to tell you why technical analysis, at least for the beginning to middle part of this week, is really kind of out the window. And then I want to show you a trade setup that I am watching for entry right now. All right, so as we all know, the market is extremely overbought. And one of the things that has helped push this market into such lofty heights was this day right here. This was the CPI report, Consumer Price Index for October. It came in below estimates, meaning that the Fed, in all likelihood, would stop raising rates. That was sort of the trigger, right? That was sort of the the signal to the market that, hey, you know what? We now have data to support the idea that the Fed is going to ease off on the rate increases. And in fact, what happened was, excuse me, is that traders started to price in cuts in 2024 on that day, and the market has not stopped since. Well, tomorrow, Tuesday, we get the same thing in the morning at 8:30 a.m. So what could happen is if we get another soft reading, if the number comes in soft, you know what? If the number comes in a little cool, all-time highs are not that far away. Right up and through here, a little over 480 in the S&P, and we're 20 points away. I mean, that's reasonable. All-time highs before the end of the year are actually attainable if that number comes in below expectations. If, however, that number is a surprise and comes in hot, and we have a situation then where, maybe those rate increases that we started to price in are a little premature, right? Maybe the Fed may not still be ready to raise or wanting to raise anymore, but maybe those rate cuts that traders are starting to price in are a little premature. And then what we may have happen is the exact opposite, where we start to work some of this back down into here. Okay, so it could also be just a big nothing burger, which is kind of what I think is going to happen. But we have to be aware of it. And then on Wednesday, we have the FOMC. We've got Fed. It's Fed Day. We've got the announcement at 2 p.m., which I, again, along with everybody else, assume will be a non-increase and a non-cut. It'll just be no change. But the key will be the 2:30 speech by Powell. Is he going to come out and sound a little hawkish? Is he going to come out and sound a little dovish? We don't know. But we have two potentially huge market-moving events on Tuesday this week and on Wednesday this week. And because of that, technical analysis right now is just out the window. Traders are going to say, hey, you know what? It's been a nice run. I want to see another card. I want to see how the market reacts. And that's what I'm at. That's where I'm at right now. I want to see how the market is going to react to the data on Tuesday morning. And then I want to see how the market is going to react to what Powell says, not whether or not the Fed raises rates, because they won't, or whether they cut rates, because they won't, but what he says and the tone in which he says it. He probably will say very little, but a lot can be gleaned on the tone. Excuse me, man. I don't know about you guys, but this cough that's going around is just, it never ends. So anyway, out the window, technical analysis, forget it. Tuesday is going to be potentially emotion driven, CPI data driven. It's going to be traders that are either scrambling to get long or traders that are scrambling to get out of longs, or it's going to be a nothing burger. But I want to wait and see. And then sort of Wednesday afternoon, Thursday morning, I'm going to start looking for trades again. But there is one trade that I want to put on your radar right here, and it's Google. Now, Google here on the daily chart, you may say, hey, Nate, well, I thought you were looking for red dots down here for a squeeze and, this pattern and everything else, right? Well, that's all true. And the chart that I'm actually looking for in Google is the weekly chart. The weekly chart. So what we have in Google is the all-time highs right in through here. And we've got this pattern of consolidation underneath the all-time high and a weekly squeeze with a bullish momentum shift, right? This is what we talk about pretty much every week. So for me, you can see I've got a couple. These dotted lines are my alerts. I've got a couple levels where I'm looking to try to pick up Google. All right. The first level is in through here off the 21 EMA, around 130 and a half in Google. And then the one below that is around 127 or so. So those are the two names, or the two prices where I'm sort of looking to start getting engaged, getting involved with Google. And if we look at the daily chart, they have earnings out here on February 1st. So what I want to do is I want to simply go over to the option chain. I want to go over to Google. And I want to buy calls that expire after that date, right? So for me, I'll go down here to February. and we will look at the February monthly, the February 16th monthly, 24 calls. Not obviously it's 2024, February 16th, 2024 calls, and I will look at these $135 calls, or maybe the 130s, probably the 135 calls, to try and pick those up at these prices that we just talked about for a run in Google to play this weekly squeeze up into earnings. That's what I'm looking for. That's my trade setup. And if I, with all the potential volatility that's coming Tuesday with the CPI and then Wednesday with Powell, maybe I'll get that opportunity to pick up some Google on a dip later this week. So put that on your radar. I love Google for new all-time highs. It may not happen this year, but definitely next year, I think Google is going to make new highs. So I want to get positioned for that now. All right, that's what I've got. I hope it helps, and I will talk to you all soon. Have a good one.